Hi, everybody. It's Kanisha, the Beauty CPA. Now, I know we were supposed to go live tonight to talk about how to know when you needed to start tax planning for your business and kind of how to get started. But y'all know life be life in. So I didn't want to leave you hanging. So I'm going to pre-record this anyway, and I'm going to post it or house it in the Facebook group. Okay. So hopefully you're a member of the Facebook group, Beautypreneur Finance Mastery, where we have all of our content and all of our guides that takes you through various tax and accounting topics. And this will be in addition to that. Okay. Again, we're going to be talking about how to know when you should be tax planning for your business and how to get started. Okay. I am going to share my screen in a minute. Just for those who may not know a ton about me, I am Kanisha Coleman. I'm the Beauty CPA, and I am the founder of the accounting firm Coleman Tax, where we serve beauty entrepreneurs. Our main mission is to get that tax bill as low as it legally can go, right? While getting you financially organized in your business. Okay. So let's get started. And I promise, just because I'm pre recording this doesn't mean I'm going to be like rambling on and on and on because I know y'all got other stuff to do, even if this is not live. So I'm going to try to keep this really, really tight. Do me a favor. Okay. When you see this post come up, and you see all the other materials that I'm going to post for you in the comments, let's start the conversation. Okay, just because we can go live tonight, don't mean we have to not talk about this. Go ahead and post any comments, reactions, or questions below in the comment section, and I or a member of the team will get back to you. Okay. And then before I get off, I'll make sure to let you know how we can keep the conversation going in the case you want to meet with us to talk about your specific personal information or two into what we're going to be talking about next week on August the 31st. I really want to blow this topic up, right? I really want to go through the entire thorough detailed system on how to identify tax planning opportunities. But for right now, we gotta start high level. I want to give y'all an umbrella of what's to come for next week. So let's get started. Okay. How do you know when you need tax planning? I think like early in the week, or maybe even like the end of last week, I was like, everybody needs tax planning. Remember last week we talked about some of the misconceptions and myths around tax planning that I've been hearing right from y'all mouth. I talked to hundreds, maybe even thousands of beauty entrepreneurs throughout the year through my speaking engagements, my clients, as well as just our discovery call process and social media and casual networking. And I hear a lot of just misconceptions and myths, and we debunked those last week. In the case that you miss anything, go ahead and look at the live video that I hosted last week, but it is like living within the Facebook group. Go ahead and take a look at that. You can also look at our blog on thebeautycpa.com to check out like a full thorough list of what a lot of those misconceptions and myths are. But one of them is that you don't need tax planning, or maybe like you think it's like overly complex or costly, right? And we debunk that. We debunk that. Number one, everybody needs tax planning, right? So I asked the question, how do you know you need tax planning? If you got a tax bill, you need tax planning. Even if you're getting a refund right now, your circumstances and situation that caused you to have that refund may change from tax year to tax year. So in the case that happens, you got to be ready. You got to be ready. You got to make sure you catching it and you strategizing and you're arranging your financial affairs in a way so that you don't end up with a tax bill simply because you didn't switch things up from year to year, right? So whatever caused you to get a refund, if anything changed, anything, right? That could be you got married. That could be you got divorced. That could mean you had a baby. That means maybe your baby turned 17 or 18. They moved out of the house. So now they're not dependent no more, right? Maybe you were W-2, now you have a business. Maybe you had a business, now you retired. Maybe you bought a house. Maybe you sold a house. Maybe you bought or sold investments. Maybe even the tax law just changed, right? Anything could have happened, but you got to keep looking at this stuff and you got to catch it So if any of those circumstances happen, if you catch it by tax planning, you can make sure you keep the refund you've been getting, or if you result in a tax liability, it's as low as it could go. So I'm going to say everybody needs tax planning. Even if you're getting a refund this tax year, you may not next tax year. Okay. And especially if you have a liability. I'm not saying tax planning will completely eliminate it. It's on a case by case basis, but it could. You won't know though if you don't do that tax plan. So let's clear that up right now, right? Let's clear it up and saying, well, I got a refund, so I don't need tax planning, or my bill's already low, I don't need tax planning. Things change, especially if you're not looking at that profit and loss statement every single month consistently and understanding what's going on from a business perspective and a tax perspective, and just monitoring everything that's happening to you in your personal life, as well as any tax law changes. Okay. We got to make sure that everything is staying steady, and you could only know that if you are tax planning. Okay. So I hope I answered that question for you. Who needs tax planning? Everybody. If you making money, the tax man gonna want they cut. So if that's the case, you need to be tax planning for that money. All right. Now let's get into getting started with tax planning. With anything, you want a system, you want a framework, you want some instructions, right? I don't want to just tell you to just go start tax planning, because I know you're gonna be like, well, where do I start? Like, how do you start tax planning, right? All right, I'm gonna just let y'all have it, right? A lot of other tax professionals, they gatekeep. They gatekeep information. They be like, I went to school for this many years. I paid this much money. I passed this many really, really hard tests, like really hard tests, like multiple times. Not me. I passed on my first time. But, some of them think like that. You know what I mean? So, but I don't gatekeep information. Everything that I learned in school, through the CPA exam, all of my experiences, and even just networking with my colleagues, right? Other firm owners. Anything I learned, I'm going to just share it all. I'm going to share it. That's what I'm here for. I love teaching. I love sharing information, especially if it's going to help you save money. Okay. So here I am. I'm going to give you my exact framework, my exact map that I use when I review tax returns to see if it has further tax savings opportunities. All right. This is the money finding map. All right. It's a map. I'm going to give it to you. You use it and you be like, okay, you use this, and you go through your tax return, your financial profile, and you identify tax saving strategies. All right. I am going to share my screen. I printed it out like old school, like paper. Oh, I blurred it up. You can't even see it because I got the blur function on. I've been playing with these features lately, y'all. It's kind of neat. I hope y'all don't think I'm corny for this, but I had to like zhuzh up the Zoom, zhuzh up the video a little bit. Okay. One day I have like a little goal to learn video editing. I ain't learned it yet. I have it in my back pocket though. I'm gonna learn it. I'm gonna bring y'all some more interesting videos, right? But for now, we got the Zoom filter popping. But I'm going to share my screen and I'm going to show it to you. And I'm going to go through each one of the elements of our 6-step tax planning framework that we use to identify tax saving opportunities. Okay, hopefully this tech works. I'm going to give it a shot. I think it's going to work. All right, I think it did. Okay, here we go. Now, I'm going to link in the description to this video how you can get your hands on a copy of this framework. Because I want you to take it, I want you to print it out on some nice paper, and I want you to put it in your business records in your office, or put it on your little cork board, put it wherever you have your bookkeeping systems, wherever you got your bookkeeping system outlined, your SOP or your instructions. I want you to put it there, and I want you to incorporate this into your monthly CEO/CFO day, right? Do not forget, when you get done with that bookkeeping, look at the tax ramifications of that net profit. But let's go through all the elements. Okay. These are in no particular order. Okay. So I don't want you to think like, since this one comes first, it's like the most important, because it ain't. They are all equally important. All right. But let's go through them. Element number 1. And just warning, I'm going to harp on some more than others. because from my experience, I have seen more savings come from some more than others. So, but again, that doesn't mean it's not important. All right, let's go. First one, accounting methods. What do I mean by accounting methods? When I talk about accounting methods, this is referring to how and when you're reporting the income you make in your business and the expenses. Okay. In general, there are two accounting methods. You got cash and you got accrual. Most of you all are on cash or some modified cash basis. All right. Most of you, very few of you are on accrual. Okay. But accounting methods is an element in this framework because, right, if you are in the cash method of accounting, that means that you're going to report your income soon as you get the cash, soon as someone swipes the card with you. You're going to report it as soon as you get it, okay? Even if you ain't do the work. For example, I know some of y'all are selling like memberships or packages to your services for your clients, right? And some of you are like, sometimes at tax time, some of y'all be like, well, I don't think I should be counting that as income because even though I got the cash, I didn't do the brows yet. I didn't do the lashes yet. I didn't do the skincare procedure yet. Under cash method of accounting, IRS says in general, you got to report that as income, pay tax on it. Now it's some workarounds. That's where tax planning comes in. It's some workarounds. But in general, that's what the IRS wants. As soon as that cash hits your pocket, as soon as you got control over those funds, they want their cut. They want their taxes on it. Okay. That is compared to accrual. Let's use the same example from the packages and the memberships. Yeah, you got the money, but you're gonna set that aside over here, like in an escrow account. You're gonna set it aside. You ain't gonna touch it. You're gonna set it aside because you haven't earned it yet. You have not earned it yet. Client ain't came in and took advantage of it yet. So you don't have to report this income. You don't have to pay tax on it at all. Okay. Let's flip this around to expenses, right? When it comes to expenses under the cash method of accounting, when cash leaves your account or your hand to pay for something, deduction. That's why when like at the end of the year and people be like, oh, you want to save on taxes? Go buy this, buy that. Because as soon as you let the cash leave your hands, leave your control, you can expense it and get a tax deduction for it. Okay. On the flip side, if you're under the accrual method of accounting, you cannot expense something until you have incurred it. And IRS has some pretty specific definitions around what incurs means. Now that is beyond the scope of this live. So I'm not going to go into that deep. Okay. Maybe we will next week. Maybe. But just know accounting methods is an element in the tax planning framework that you should definitely look at if you're trying to identify ways to save on tax. Okay. We got to look at the way you are accounting for things, for income and expense items within your business, and slight changes to it can save you on taxes or at least defer it to a future year. Okay. All right. That's accounting methods. Now, let's talk about maximizing deductions. And y'all know I can harp on this. I go so hard with maximizing deductions because there is an interesting statistic out there. 93% of small business owners do not take all the deductions they're entitled to. And because of that, they chronically, notoriously overpay in taxes. I saw this a lot when I worked at the IRS. When I worked at the IRS as an auditor, I'm looking through the tax return and I'm looking through the taxpayers' books and I'm like, why didn't I write that off? Why didn't I write this off? I didn't know. I don't know. I couldn't say nothing. I'm on the IRS's team. But now that I'm not, I am here to tell you and to inform you, you need to maximize your deductions. Now, the reason why small business owner and beauty entrepreneurs specifically fail to do this, couple reasons. Some of the top ones, one, you're not bookkeeping, right? Can't deduct what you don't track. Two, you simply just don't know. You simply just don't know. which is why Common Tax, we have a freebie. It's called the Ultimate Tax Deduction Guide for Beauty Entrepreneurs. I'll put a link to that in the comments or in the description to this video so you can get your hands on it. So you can stop overpaying in taxes and take all the deductions that you are not used to, okay? There's one exception where you wouldn't do this, just one. One exception is if you're trying to get a loan for any reason. That's the only reason why you wouldn't maximize your deductions. Is because you need to show net profit, right? And deduction is going to decrease net profit, all right? But if that's not the case, you should be taking all those deductions so you can save on tax, okay? All right, element number 3, tax incentives and credits, right? Y'all forget about credits. Credits is like the unsung hero. It's actually more powerful than deductions because it decreases your tax bill dollar for dollar. They're super, super powerful. So I'm not going to rattle off a whole list, okay? I have other content that would do that for you. Actually, there's a guide in our Facebook group that does just that. Talks about the credits that every beauty entrepreneur must know. So go take a look. I will put that in the description as well for your easy reference. But just don't forget about credits. They're more powerful than deductions because they reduce your tax bill dollar for dollar. Okay. This is on the business and the personal side too. Don't forget about those personal tax credits. All right. Ooh, this is one of my favorite ones. Element number 4, business entity structure. Okay, what do I mean by that? What I mean by that is, how is your business organized? Did you just wake up and say, you know what, I'm going into business myself, right? You didn't go get an LLC. Maybe you have a DBA, but you didn't get an LLC. Or maybe you did go get an LLC. Is it just you or is it more than one of you? Are you in a partnership? Okay. Did you take your LLC and go file to be an S corporation? All right. Or even a C corporation. Okay. That's what I mean by business entity structure. How is your business organized with your Secretary of State? The reason why I love this one is because you can literally save tens of thousands of dollars just by switching entity types. Just by switching entity types, just from going one to the other. Now, don't get me wrong. I'm not saying it's like as simple as snapping your fingers. There are a little bit of moving parts, just a little bit. But the benefit far outweighs the effort. When I say saving tens of thousands of dollars, I'm talking about tens of thousands of dollars. I'm serious, y'all. Okay? So please, if you do nothing, make sure you evaluate whether the business entity structure that you picked is still serving you well when it comes to taxes. Because what I see is most people just set it and forget it. They are still operating under the same structure they chose 5-10 years ago, while the net profit is continuing to increase. They never evaluated whether they could save on taxes by making a switch, okay? We're going to go into depth about this next week. I'm excited for next week. I hope y'all are too. But just know that is an element in the framework that you must consider. It's a very easy way to save a ton of money in taxes. All right. Number 5, retirement planning. Okay. This is near and dear. Because let's put taxes aside just for 1 second. You should be saving for your future self. You definitely should. You will not work forever. I know you love what you do. You love it so much, one day you probably was doing it for free. But that is not the way. You will not be able to do this forever, right? And you want to live comfortably in your mature, seasoned years. So we got to save some money for that. We have to set aside money for that every single month. And while you are doing that, you can save on taxes while you're doing it, okay? There are several options for beauty entrepreneurs. There are several, and we'll touch on some of those next week. I hope you're planning to be there next week. It's going to be a good one, and it might even be a long one. We might even split it up into 2 parts, okay? To be honest with you, so I don't have to keep you all night in one evening, okay, during the week. But just remember, an element, a part of the tax planning framework is always retirement savings, because we want to save for our future selves, and you don't get a tax benefit while you're doing it, okay? The last one, last but not least, this is by far the most exciting, right? This is the most exciting for me at least. Tax loopholes. Now on the handout, you're going to see advanced strategies here, but it's loopholes. It's loopholes. Loopholes get all the shine, right? Every time there's a political season coming up, which we are in one now, okay? We're in one now, and it's going to continue at least for the rest of this year and all of next year because we're voting for another president next fall. But guys, loopholes are legal. Okay. I don't care how much of bad rap you hear about it in the media, loopholes are legal. Now, and everybody else, when I say everybody, I mean big business, wealthy folks, celebrities. They exploit them to pay the least amount of tax possible. You should too. Okay. As long as it's legal, you should be doing it. If Congress wanted to change it, they can and they will. But until they do, we will take advantage as well. And I suggest all of you do this well. I got a whole cheat sheet of loopholes. I do. I got cheat sheet loopholes. There are a ton of loopholes, but I got the ones that I see beauty entrepreneurs use the most and that pays off the most for the industry. Okay. I haven't talked about this a ton, but we do have a tax planning bundle that we offer. It's called the Ultimate Tax Planning Bundle for Beauty Entrepreneurs. All right. I'll link the information to that also in the description to this video so take a look at that. Okay. It goes through each one of these elements in depth and gives you tools to put some of this stuff in practice, especially the entity structure one, especially how to analyze your numbers on a consistent basis throughout the year so you can see and catch when that structure is no longer serving you, when it is costing you money and when you should be making a switch. Okay. I will put that product link down below. It is at special pricing at $47. There's a code that goes to that. I'll put that down below. Okay, just for our Facebook group here. But check all of those resources out. These are money finding resources. Okay, these are money finding resources. Usually, this information that I'm sharing with y'all have to pay a lot of money for. But here I am sharing this with you. So hopefully this can plant a seed for you to do two things. Either you can book a call with us at thebeautycpa.com. It is free, a free discovery call where we review your tax returns with you to let you know if you have any further tax saving opportunity. Or two, if you already work with somebody, cool. No shade on that. But at least you can take this and have that seed planted to have a conversation to make sure you're in a good place come tax time. All right. So let's go over these one time and I'm gonna let y'all go. Here's our tax planning map. This is a way to identify further tax saving opportunities. Okay. Number one is going to accounting methods. Number two, maximize those tax deductions. The only reason why you wouldn't if you're trying to get a loan. Okay. And you can't do that for at least, 2 years. But if you ain't trying to get no money from nobody, go as low as you can. All right. Tax credits and incentives, maximizing those. Do not forget about tax credits. They are more powerful than deductions. Okay. Entity structure is the way your business is organized. Is it still serving you? Retirement planning. Save for your future self. Save money while you're doing it. And loopholes. Tax loopholes are not just for the wealthy. They're for everybody. So you should be exploiting them to save you some money as well. Okay, let me stop my share. That was all I have for y'all folks. Remember to look at the resources I am going to link down below. Okay, I gotta run. I'm gonna post this video now. All right, but I'll circle back and I'll put the additional information down there. So you have all the resources as well, and I'll probably turn this into a guide at some point. All right. Let's start this conversation. This is not the end. Remember, we do tax planning all year. So if you're looking at this and you got any comments, questions, reactions, whatever, just put them down below. And I or someone from our team will get back to you. All right. I got to run. This was amazing. I hope you have a great rest of your day. All right. And I will talk to you. I'll see y'all live next week. All right. Bye for now.